This is Order Flow Trading Course, lesson number 13, Understanding Order Flow, Fair Prices, and Absorption. My name is Michael Valtos. I'm the founder of orderflows.com. First, I need to read through a quick disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. CFTC Rules 4.41 state, hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Okay, Lesson 13, Understanding Fair Prices and Absorption. Fair prices are levels where the market does what it's supposed to do, facilitate trade. When the market is facilitating trade, both buyers and sellers are happy to transact at what they deem a fair price. When you buy a car, you negotiate back and forth with the dealer until you both agree on a fair price. The same is true in the markets. Like I said, think about it. When you go to a car dealership, you have in your mind what car you want to buy at what price. The car dealer has in his mind what he wants to sell that car at. And you guys go back and forth on price until you both agree at a level that you're happy with. It may be the car dealer lowers his price and you go up to it and meet him at that, or he comes down and meets you at your price. What you're seeing in the futures markets is just a microcosm of what happens in everyday life. Absorption will occur at levels of fair prices. Trade is nearly even distributed between the buyers and seller, with neither side taking control in any discernible way. Now, the easiest way to tell a market is exhibiting absorption is when there are small deltas in the bar, when normally you're going to get above average to high delta numbers. What that means is buyers and sellers are equally matched. Now, consolidation is something that's often confused with absorption. A market can be consolidating, but that doesn't mean it's in absorption. When a market is consolidating, it's often pending a big move and trading slows down. When a market is in absorption, there can be heavy volume as traders are happy with price and inventory. So what I'm trying to say is, a market is consolidating. It could be slowing down. I said it could be a number coming out in an hour. Or so, someone from the Fed could be speaking later, and the market will generally slow down. Volume will contract, it'll get smaller. Whereas in absorption, price may not be moving, but you're getting heavy volume trading on both sides. That's one of the differences. Like I said, even though consolidation, the market's not moving. Absorption, the market's not necessarily moving. But with absorption, you can get very heavy volume. And, it's both buyers and sellers are happy to move supply and demand, move their supply to other buyers. So a market can range trade during and after absorption, at which point buyers or sellers take control of the market once again. So, when you could be in a period of absorption, then you sort of start to come out of it. You're still going a little bit sideways, until one side really shows its strength and can start to move the market in one direction or the other. For example, this is the E-mini chart. We worked our way down. You got this selling imbalance on heavy, with heavy volume, but very good selling. You got a stack selling imbalance. And then what happens? The market didn't necessarily continue to sell off. It just went sort of sideways. You're seeing bars here with fairly small deltas: 71, 76, 65, 16, and the market is just, basically going sideways to a little bit higher. I mean, there is this bar here with, a big, strong positive delta. But then, the market just goes sideways again. It's once the deltas really start, getting stronger, it's telling you that the market is starting to move out of absorption. When you're seeing small deltas, you got 2,000 lots traded here. It's only got a difference between buyers and sellers of 1,700 lots. It's only got a difference of 65. 4,000, it's only got a difference of 76. 3,000, it's only got a difference of 71. And the market is starting to pull away, a little bit later, as you're seeing the deltas start to accumulate more and more on the positive side. If the deltas were starting to accumulate, if these were negative 465 and negative 11,000, I'd view it in the opposite direction, thinking the market's going to go lower. This is a bond chart, and what do you have here? You've got, you sort of worked your way down, and then you went sideways, right? This is, you look, when you start going sideways, watch the deltas. You can see buying and selling is evenly matched. You got point of control sort of lined up at the same levels. You got minus 38, plus 35, plus 31. There's not much difference in the deltas. Then all of a sudden you see the sellers appear here quite strongly, minus 300, minus 600, and the market starts to come off. It does sort of run into this positive delta of 631, which is sort of equal here. And it's just, when you take into account the other factors, all the single prints, it's telling you price is being rejected there. But, there's a move to push the market lower, coming out of this area of, what I consider absorption, where you're getting the buyers and sellers evenly matched. So, sometimes you have to think what goes through the mind of a big trader, an institutional trader. When they're trading size, you try and do it without moving the market. That means sometimes you have to wait until liquidity is there. So, even though you have a big position and you want to get out, you can't always just get out at current market price. You got to wait until there's liquidity in the market. That's why the busiest times of the day often are cash open, the cash close. That's because, that's when you're getting a lot of the, program trading coming in, or, program trading ending for the day and tidying up their positions. But, as a trader, when you have big size to move, you want to look for the areas where you're not going to impact the market to, to either enter or exit your position. And that's going to be the areas where, where absorption is happening, where buying and selling is evenly matched. If you've got 3,000 minis to buy, well, most retail traders don't, but, the big traders, they've got 3,000 minis to buy. If they can start buying it without moving the market, the market's absorbing that order. It's when the prices start to move away from absorption, that's where the big money can be made, because that's when you already had the shift of inventory from one market participant to the other. So, once the person shifts their inventory, that's when, the moves start to happen. Either they're building their inventory or they're getting rid of it. So, here's some chart examples. So, we're working our way down. We sort of stop here, right? We got some very strong selling, minus 1,700, minus 2,300. Then it comes in minus 67, plus 27. The market's sort of pausing, catching its breath. Its buyers and sellers are evenly matched. But then you see the selling come in again. Bam, minus 1,200, minus 1,000, minus 1,500. And the market's just working its way down. You could, judging by the delta, and the prevailing trend of the market, you can see what's happening. Like I said, you have this move down, and then just sort of stops here. Maybe it could be a little bit of profit taking. There's a nice sharp move down. People are happy to transact at this price right here. It's, you hit this level here with this 1244, the selling imbalance. You think, maybe the market might stop to pop. It did have it is showing some levels of support here. But then what happens? The selling just comes right back in and moves it down. Like I said, the market often moves in waves. It's like, imagine you're surfing. You ride the wave when it appears, but there's times where it's just quiet. Wait for the next wave to appear. Okay, this is a bond chart, and what's happening here. You have, you're sort of working your way up a little bit, slowly grinding your way up. You got positive delta of just 15 here. This one, you hit the high. It's got a negative delta, but then you get this next bar just off the high. It's kind of a smallish delta, 48. Then you're watching what's happening up here at this high. if market's going to go higher, you're going to see the deltas be positive. Once they start contracting, people are, market's being absorbed. People are, absorbing the buying and shifting, the sellers are shifting their supply onto the buyers. And then you see the sellers take over down here and the market sells off. It went from fairly flat deltas, 15, 132, 48. Then you get 165. It's not the strongest one, but then, here you see minus 300, which is the biggest delta in quite a while. Then it's followed by 400, as the market is falling off. Okay, this is a ES chart, and, take what you see into account. For the most part, the market is sort of range trading in here. Okay, and you're getting, some big deltas followed by small deltas, a couple big deltas, small deltas. And then, you see it just falling over here, with a strong negative delta, the selling coming in, especially as you're up here at the high. Why aren't you seeing, continuation of the positive delta? Instead, you're seeing the negative delta come in. It's consolidation, or absorption. For me, this is, kind of a hybrid, because you're getting some small deltas with, sort of alternating big deltas. But, what's important is, when you're trading up near the highs and you're starting to see, the delta slow down, and then you're seeing one side really assert itself as moving outside of that consolidation, that's when you're, going to be confident to take the trade. Just, real quick, just sort of talk about, you have this bar here with this big, strong positive delta, 1,000, but the bar is still negative. The next bar, it's a very small delta of 4. The bar's just hanging around. We push up again, a strong delta. Why isn't the market going up? If you, this bar here with a delta of 4, you can't really read too much into it. But this bar with 1,000, this bar with 500, that's very bullish, and the market's not going anywhere. So, obviously people are, interested to buy, but, someone's selling as much as they can. Because you're seeing at the top of these bars, very heavy volume, 1,600, 1,200, 1,100, 1,100. The market's not going higher as it should when you're seeing positive deltas. Like here, you got 2 positive deltas, 730, 700. It just sort of squibs up a little bit. It's not very convincing. And then what you see is, you see the sellers really start to take over. The people that were buying it, trying to push it higher, they got no more bullets left. They're empty, and they can't buy anymore. Then that's when you see the sellers just come in and ramp it down. So consolidation, say on the other hand, can occur as the market slows down and catches its breath, not necessarily at a level where inventory is changing hands in a major way. You don't always have absorption when consolidation occurs. Absorption can be a sign of a major player accumulating a position in a market. That's why I prefer, if you were to ask me, do I prefer to trade absorption or consolidation? I prefer to trade absorption, because that's to me a sign that, someone's either accumulating a position or laying off their position. Consolidation to me is just, the market slowing down. It could be to an external factor, like I said, like a speech coming up, or, or a release of an economic number coming up. If you trade grains, the USDA supply and demand numbers is coming out. The market's not going to really trade much, leading up into that number. But, if the market is showing signs of absorption, during times where it should be, moving a bit more, that's more important. Then I know someone's accumulating a position, or someone is, doing the opposite, laying off their position. So, okay, so this is an E-mini chart, and, we're going sideways here for the most part. Sort of come down and just sort of go sideways. Bing, you get a green, you get a red, green, red, green, red, green, red. And, for the most part, the deltas are kind of alternating. But you're seeing in here, right, you got volume for this bar, 7,000. Volume for this bar, 5,900. You get delta of 51, delta of 99. That's nothing. 6,000, a delta of 122. It's when you start Okay, so you got to be looking at that and thinking, okay, trade is happening on both sides of the market. To a lesser extent, 477, 500, these are just sort of average delta numbers. I mean, one side is a little bit stronger than the other. It's when, you're in this sideways movement, this area of, for me is absorption, when I start to see signs that we start to move out. I'll be looking for single prints and I'll look for increases in the delta, either positive or negative. So I see 472, okay, that's the first sign. You've got a small print, single print here, maybe it's can start to move away. And then wham, you get hit with this big, the selling comes in and then the market sells off. So distribution of inventory occurs during absorption. A big seller unloads inventory to willing and able buyers. What you have to do, you have to watch what price is doing. How is it reacting? Anticipate the market movement after the distribution is completed. So, if you can pick it up that, we're sort of going sideways and trade is happening on both sides, everyone sort of found their fair price for now. They're happy to trade at, 1910. Both buyers are willing to buy and sellers are willing to sell. And we're sort of trading sideways, 1908, go to 1910, 1912, back down to 1910, down to 1908, like that. Watch when we start to move outside of that range. E-minis. E-minis are a market that a lot of people trade, and it's one where you can see this happening, daily. Signs like this. You're getting, you sort of come into this range, and you have a selling imbalance there. So that's usually bearish for the market. But then we just sort of go sideways right after. Spending time inside this selling imbalance. And the deltas, they're not the strongest. 300, 300, 200, 100, 174. We're inside this area of the selling imbalance, and the market is sort of struggling to really move. What you're looking for, you're going to look for the first signs of the movement out of it. Here you get the single print. But then right after it, you get a very strong negative delta. So even if you're not convinced here in this bar at 846, the second bar at 846 is really the flag waving. This is get ready for the move. Then the negative delta of 1300 in the other bar, and then the market sells off. But what's happening here is people are the market's just sort of going sideways, and you don't see big deltas. Here the volume is very light. It's only 827, but for the most part these deltas are fairly small. Volume's a little bit light, so it borders on absorption to consolidation. But, when I see, the deltas really sort of contract as the market is going sideways, it's usually a sign, wait to see one side assert itself, and signs are going to appear in the order flow with price rejection, and it's going to appear with the deltas. Okay, so this is a 5-year chart. This is something you see quite a bit in many markets, and what is happening is the market's going up, and the deltas are getting smaller. I said, if for the move to continue in the direction that it started, in this case the market to continue to move higher, you're going to want to see stronger deltas. But oftentimes you'll see the deltas sort of petering out. Getting smaller as you're hitting the high. We hit the high, we only got a delta of 22. The bar before it only 357. When the bars earlier, you're getting 1300, 3000. This is the sign, hey, watch what's happening. Right now you're seeing a shift in, supply and demand, whereas, before there was a lot of demand, but you're getting up here and you got a lot of supply and it's being evenly matched. Said on the run up, you got the positive deltas indicating there was more demand than supply. But then when you get up at the high, there's a lot of supply, and then they're there to meet the demand, meet the buyers. That's why you see the delta of 22. The bar's got 30,000 contracts traded, and it's only got a delta of 22 is nothing. Then the next bar, again, you're seeing this small single print here indicating a price rejection above, above these levels. And you're seeing the strong delta come in, and the market just sells off. Unfortunately, this day the market closed, right here. But, look for these sort of, these areas as the market's hitting a high and there's no follow through on the deltas. That's the sign where supply and demand has shifted, where the buyers were in control, then all of a sudden now the sellers are in control. The delta is going to help tip you off. Okay, this is a bonds. It's quite similar. You're working your way up. You get to this high here in this bar, and it's got a delta of minus 133. Why you have a negative delta at a high. The market came off a little bit, did make another run up there, but you're seeing very small deltas, 11, 46, 32. It's telling you, even though we're making a push up here, it's not very strong. You do hit this bar here with 147, but the bar is still closed down. And then this next bar you're seeing, a ratio bounce high, indicating a little bit heavier volume up here at the top of this bar. It's a sign of price being, someone coming in here and selling, got a solid offer to sort of cap the market, and it's got a big negative delta. You should be looking to get short already. In this next bar, it's got the big strong negative delta, and the market sells off. Okay, again, this is the E-mini chart. It's similar to what I was sort of showing you a couple charts ago, but you're working your way up, right? You got positive delta, you got strong demand, and then you sort of hit this area up here at the high where we just sort of go sideways. And to me, this is a level of absorption. You're seeing 67, 151, 352, minus 261. You could almost net this together, and it's very small deltas. I mean, 261 and this 352, you got a net of 100, but you're up here at the high. Where's the strong deltas? Why don't you, if you're going to look for the move higher, you want to see a strong delta. Instead, it's going sideways. So it's telling you that there's starting to be a shift in supply and demand. Before there's a lot of demand, but then it's met with sellers. So that's why you're seeing the deltas get smaller. And then in here, you see the big negative delta where sellers have taken control. There's more supply than meets demand, and the market sells off. And this is what you should be looking for when you're getting up near highs. Look for the signs of absorption. Look for, the shift in supply and demand. And to me, this is not consolidation, even though you are going sideways. What you're seeing, it's more clear, is a shift in supply and demand. I mean, earlier on the way up, you're seeing, positive deltas fairly strong. Then it just goes sideways where buyers and sellers are evenly matched. And then the big selling comes in and the market sells off. Okay, again, this is the E-mini chart, and I said you're up here near the highs, and you're getting small deltas, 158, 104, 101, 104. Right up at the highs. You have divergences. Then you have this bar here. It's got a positive delta of 7,777. Okay, we didn't follow through in the next bar here. You got a big negative delta, minus 500, and then the bars sells off a little bit, but still has a negative delta hanging over it. And then in this bar at 849, we can't get past this single print. But then you see the deltas really start to get strong as you're moving out of this area where, trade was being facilitated with the small deltas, and buyers and sellers were happy to transact. It did show a little bit of signs of support here, but, there was no follow through. And then the selling came in and the market sold off. Okay, this is again, this is the E-mini chart, and watch what's happening. We come down, we're moving lower, and we just go sideways, over the next 8-9 minutes. And look at the deltas: 27, 49, 70, 61, 10. And then here you get 409, which is you're starting to think, okay, well maybe now it's starting to show some strength. And then you're met with a ratio, a blue number. Negative delta, then again, a single print with a strong negative delta. Sellers are clearly taking over. This was the last hurrah, this 409, which was really the only big delta. I mean, earlier you had this one, 568, but then, it's just met with all negative deltas that were small afterwards. And then, it's really changed. Sellers are taking control. So, you can, do I consider this absorption or consolidation? Some people look at it and say, oh, we're going sideways, that's consolidation. But by looking at the deltas as being relatively small, I know there's a lot of trade going back and forth. So, there's people buying, there's people selling, and, you're getting small deltas, so it's evenly matched. Then I'm going to look for when the sellers are taking over, or if buyers are going to start to take over in the market to start to move in that direction. Okay, then, again, E-minis. I like the E-minis because I said it gives you a lot of opportunities during the trading day. It's a very liquid market. We're coming down into this low, and again, you're starting to go sideways with some small negative deltas. You had this bar here with a negative delta of 700. Thinking, okay, maybe hopefully we can build off that, but then it just goes 9, 66, 27, 100, 258. It's starting to get a little bit strong. 220. It's strong, but not strong enough. 500. Okay, now you're really starting to build on it. You could really be thinking of getting long in this bar here with, if honestly at 1017 is sort of the sign to really start to get long. Then, at 1018, you got the single print, you got the strong delta. If you weren't already long somewhere towards the end of this bar, but by this bar, you should really be getting long, and the market is moving away. Okay, this is a soy meal chart again, talking about, different commodities and how it works. And you have, the sort of market going sideways here with small deltas, 22, 32, 6, 1. It's starting to see, okay, maybe, some positive deltas coming in as we're starting to move sort of outside of this little tight range. 142, 262, but then it just goes sideways again, 32, 80. And then wham, you get hit with the big sellers coming in, minus 600, minus 500, and the market sells off. Okay, again, the soy meal chart, and what you're seeing, you're looking at the same thing. We've come down into a low area. Sorry, this is our high. We have a divergence here, but we're going sideways after the high. What are we going to do? We're going to go down. Now, what's going to happen? Are we going to go down, or are we going to go sideways, or are we going to go up? And look at the delta. Will give you clues as to is the market going to go sideways? Is it going to go up? Is it going to go down? Oftentimes you get to a high or low, the market goes sideways for a little while, and people are trading. They're trading back and forth. It's a high or a low often for a reason. Either there's a lot of supply at that level, or there's going to be a lot of demand at that level to push the market higher. So you see, we come into this high here at 269, and you're seeing very small deltas: 20, 70, 30, 49, 53, 27, 72. They're all less than 100. We're still basically within 269 to 268, we're very near the high still. Watch what happens as we start to build on the delta, the buying to come in. Here you're seeing, strong deltas as the market's moving away. To a lesser extent, you started seeing as the market just was getting ready to start to break out to new highs, you're seeing some signs of price rejection. You're seeing, a single print here. You're seeing, a ratio bounds low, indicating, someone's interested to bid here at this price. And, the market is it's starting to build on some positive deltas. 53, 27, they're not the strongest. 72 is still not strong. 125, okay, if you see 125, couple it with what you saw here earlier with the ratios, you're starting to think, yeah, we could take out the high and sustain this move. Here you're above the high. The high was 269. Now you're trading 269 and a half. And you got a very strong positive deltas. The buyers have come in. You're seeing a single print here indicating on these lower prices, this level here at 269, now people aren't interested to sell anymore there, and the market moves up. Okay, this is crude. And, what you're seeing, the market came down, sort of went sideways right here in this area, 1949.68. It's a little bit of selling starting to come in, even to a lesser extent here. 170, 185, but what you're seeing single prints. You start coupling, the things that about order flow, start putting the pieces together, and it's very clear. Said, you're sort of in the sideways area with with absorption happening. I said, buying and selling is fairly evenly matched. You got this area here where you have, close to, well, even taking it here, going back to 1200, 1100, 1100, 1200, 1200, you're talking close to 6,000 contracts changing hands, and the deltas are pretty flat, if you were to sort of sum up these and do the math. And then you're seeing, the single print, ratio bounds low here, with the deltas still being negative, and then you see the deltas starting to grow in size and the market sells off. Look for areas where you start to see the deltas get small. It's a sign of absorption, where price is going sideways. Then watch what happens once, either the buyers or sellers take over. In this case, you had buyers and sellers evenly matched. Okay, well, when the match is even, watch what happens when someone starts to pull ahead. In this case, the sellers start to take over and move the market lower. Imagine it like I don't know, I mean, you talk about sports, talk about, a horse race. Here, the markets, the horses are evenly matched. They're all, running at the same speed. And then, you're starting to get one pull away, with the negative deltas. Talk about football, the score is 0-0. Now, a team is starting to move the ball. And, in this case, the sellers are taking over. One side is starting to show its strength. Crude again, commodity markets are, are markets that really follow supply and demand very well. Supply and demand moves prices in commodity markets better, I think, sometimes than financial markets. And, what happens? You're going sideways, but you got very small deltas, 23, 87, 64, 26, 11, 49, 37. As you start to move out here, you get hit with this big delta, minus 637. Sellers have finally taken over. Whereas before they were evenly matched. The buyers may either have stepped away, or in this case, it's sellers are overwhelming the buyers and moving the market lower, and the market sells off. If you're sort of in this range here, you don't know, is the market going higher or lower? You're looking for the signs is when you're coming out of the absorption. But you should be able to tell when you're in a level of absorption where the market is facilitating trade back and forth. It's not going to be one straight line, one level. You're not going to say 31.95. It's going to be an area where price fluctuates around. But it's once you start moving outside of that area, and the delta is going to help you determine when you're in this level of absorption where the market is just going sideways. Once the delta starts building up in one direction or the other, in this case it's negative, look for the continuation in that move. Crude again is a 987 tick chart, and the market's working its way up, then it just sort of goes sideways up here. Starts slowing down. 65, 82, 100 is fairly strong. 4 is nothing. At the high, you hit this high here, and you only got a delta of 4. That's not very encouraging. 149, 148, it's kind of average. Then you're seeing a strong delta, 300, 200. Kind of flat again, 80 and 25. You're going to watch the delta for what's happening, which way the market's going to move. Honestly, when I see this, I'm more inclined to want to get short. Since, you're spending time up here near the high, and you have some small positive deltas, but they're not necessarily strong enough to get the market to move, and then you see the sellers come in. Look for that. This is the change. You have the absorption, then all of a sudden you have a shift in demand to supply. More supply here. You're seeing strong selling. And this is a crude chart again. Now we've come down to a low. You're working your way down. You sort of slowing down a bit. 9, negative 9, 0. I said you do see 0 sometimes, but they're not always. You may see it a few times a day, but they do occur. And I think it's more of a coincidence. I don't think you can necessarily read anything into it. They said oftentimes you get small deltas of like 9 or 13 rather than 0, but I said it does happen. Then you get the strong delta of 3 minus 300. Well, where's the follow through? And then in the end, it just sort of goes flat over the next couple of bars. 13.46. It was sort of slowing down here. You get the final push down. Sort of everyone puking out of their trade, so to speak. And then you just sort of go flat over the next couple of bars, and some buying starts to appear. 228. And then, it's still kind of flat, 73.53. Then it's starting to pull away again from the low, 120, 198. This area in here, you're coming down into the low, and the market's going sideways, basically between 933 and 940, where the deltas are fairly flat. I'm willing to look at, when you have one big negative and one big positive, I'm willing to sort of take it as they sort of cancel each other out for the most part. But what I'm really looking at is when you string together, an area where you got relatively small deltas, 9, 0, 13, 46, 73, 53. I'm looking for when you start to pull out of that, which direction the market's going, and the delta is going to give me the clue. So this is a mini chart again, and what you're seeing is, you got delta of 114, 1,000, minus 700, minus 1,000. You get these two strong negative deltas, and the market's not going any lower. Then you get small delta 95, small delta 23. Then you see the positive deltas really starting to build up, 900, 700, 500, 2,000, as the market is moving higher. What's in this area here? The 1,000 and the 1,000, I could sort of negate them. In one case the bar is higher. Sorry, one case the delta is positive, one case the delta is negative. The bars are very similar. There's obviously a little bit more selling early in this bar, but for the most part the market is going sideways. And when you talk about buying and selling being equal, you're looking at the delta. When you see 95, you're saying buying and selling is equal, but when you have bars sort of in the same area, one big negative delta, one big positive delta, so this is a negative minus 1,300, this one's positive minus 1,000, together the buying and selling is fairly equally distributed there. And then the market just starts to rally up. You're seeing, looking for the signs of the positive delta. Like here, you're thinking maybe, maybe we could start stringing together some more negative deltas, but, it's not always a nice case when you have a bar that turns higher with a strong negative delta. Then you look to the next bar. Again, it's a small delta. It's a green candle, so the bar closed higher. It's telling you that the selling that was there isn't there anymore. Then you just see it sort of go sideways with some fairly small deltas, and you see the buying really appear. This bar here with a negative delta of 1,300, it was probably more at one point. It was probably minus 2,000, but the buying came in late to push it higher. And then the next bars just sort of go sideways. Sideways to higher, and then you see the market start to move away, but it's moving away on strong deltas, 900, 700, 500, 2,000. Here's an ES chart. And what happens? You come up here, you hit the high, you got a delta of 2. As you're sort of going up there, it kind of stalled out a little bit. You got this delta of 500. 62, it's kind of, it's very a neutral number. You get a final push here, you're thinking, okay, now the buying's coming back, but then you hit the high and you got a delta of 2. 16,000 lots traded in this bar, and it's got a delta of 2. Where's the follow-through buying? If you're looking for the market to keep going up, especially after this bar with some strong positive delta, it didn't. There was no follow-through, and where you had a lot of demand on this move up, all of a sudden now you've got a lot of supply. And then the next bar, very strong negative delta, 2,000. Here you got the single print. It was a nice little trade you could have taken in this bar, I think, here at 957 to get a nice little profit. E-minis again, what's happening? You get 30, 127, 200, 300, 400, 200. Yeah, these are all relatively small delta numbers. 200, 300, 400 is kind of, just a little bit outside of the band. Definitely if I see a number around 150 to 100 and lower, it's kind of, neutral in the sense that, one trade can be the difference of this delta being positive or negative. 200, 300, 400 is probably a difference of 2 trades. But, what's happening? It's kind of evenly distributed, a little bit more to the negative side, but we're up here near the high. So you're seeing again, is it absorption? Yeah, people are happy to trade. Buyers, there is demand to sort of move it higher, but it's met with sellers. And then the selling comes in. The sellers take over. People that, the demand that was there isn't necessarily there, but the supply is there. Supply is moving the prices lower as the people that own the supply are looking to get rid of it. And, lastly is a 10-year chart. 10 years are a very liquid market, and you're going to see big numbers in the volume profile. So when you see small numbers in the deltas, watch out. And here's a bar is traded 5,000, you got a delta of 41. Here's a bar is traded 10,000, you got a delta of 159. Those are very small deltas, and usually on a 10-year chart you're going to see deltas in a couple of thousands. And what's happening, you've sort of come down into this low area, and you're going sideways. You can see the point of control is all sort of lining up here, and the deltas are fairly small, 41, 159. But you know what, it's sandwiched around these deltas here, 1300, 2700. But what's happening, you're at a low and you're seeing buying take over from earlier on the move down. You're seeing the selling take over. So watch it. This is an area where coming into here, you don't know if it's going to keep going lower or stop and then turn around and go up. It's an area where there's I'll say fair trade, but buyers and sellers are evenly matched for the most part, and you're seeing a shift in supply and demand. Now you're seeing demand take over as the market starts to go up, and really your clue in that shift is the delta. Whereas before you're seeing strong negative deltas on the way down, now you're starting to see you're at the low. Deltas sort of go flat, and you're starting to build up positive. You're seeing the demand pick up. People looking at bar charts will say, oh, you can see that shift in supply and demand. Well, can you? Why didn't it happen here in this bar? Where you had it earlier. But you see when, the buying and selling are evenly matched, people are happy with the price here. It's a fair price. They're happy to trade at these levels. And then, price just sort of starts ticking back up on more demand. So, the main thing in this chapter was understanding fair prices and absorption. I hate to use consolidation because markets consolidate all the times, and it's due to external factors, whereas absorption happens because, market reaches a price level where people are happy to trade, and you see a lot of volume sometimes go through without moving the price. So, people that have size to move in the market, they want to trade at times of days when they can move their size, without moving the market, whether it's, the cash open, the cash close, even during the day when we reach certain price levels of, it could be support or resistance, the reason doesn't necessarily matter. But what you want to know is you want to see where, price reaches a level where buyers and sellers come in on both sides and are evenly matched. And then what happens as you start to move out of that area. So that's the end of lesson 13, fair prices and absorption. In the next lesson, I'll show you how to read the market using order flow. I sort of touched on it a bit, in this chapter, starting to put things together with delta and price rejection, single prints. But really, once you really understand order flow, reading the market is just like reading a book. And I think one of the reasons why people get discouraged with order flow is they see a lot of numbers and they just think, oh, my head is going to explode with all those numbers. I don't understand math. And you don't need to know math with order flow. You just need to understand, just the basic supply and demand and go from there. So thank you. That's the end of lesson 13.